How to get business credit with no personal guarantee. Can someone really get business credit with no personal guarantee? Per businessdictionary.com, a personal guarantee is an agreement that makes one liable for one's own or a third party's debts or obligations. A personal guarantee signifies that the lender, obligee, can lay claim to the guarantor's assets. How to get business credit with no personal guarantee. Can someone really get business credit with no personal guarantee? Per businessdictionary.com, a personal guarantee is an agreement that makes one liable for one's own or a third party's debts or obligations. A personal guarantee signifies that the lender, obligee, can lay claim to the guarantor's assets in case of the borrower, obligor, default. It is equivalent of a signed blank check without a date. The obligee is generally not required to seek repayment first from the obligor's assets before going after guarantor's assets. The lender's actions are usually based on whose assets are easier to take control of and sell. Once signed, a personal guarantee can only be canceled by the obligee. According to Inc., by making a guarantee, you are putting yourself and your assets on the hook by acting as the loan's cosigner. If your business dissolves, you will be responsible for repayment. Creditors will go after you in the event that your business fails to repay the loan. Wikipedia best outlines what you should know about a personal guarantee when they state that a personal guarantee is a promise made by a specific person, an organization, or other entity to be known as the guarantor and to accept responsibility for some other party's debt in the event the debtor fails to pay it. The usual and most common purpose of a personal guarantee is typically to allow an organization or person to obtain credit when they lack a credit history, or they do have one but lack a credit rating sufficient to qualify for credit. In the business world, personal guarantees are requested when the business is unestablished and lacks credit history, a credit profile, and credit score. They are also sometimes required for larger loan amounts, or always requested for loans guaranteed by SBA, conventional bank loans. And it's also required when some other higher loan amounts in which no collateral is being pledged. When you complete a loan application and provide your Social Security number, lenders will almost always pull your personal credit to make the lending decision. And you'll also, in most cases, be providing a personal guarantee. Although this might be a necessity with some conventional and higher amount loans, it's not required for smaller business credit cards. With business credit cards, if the business does have established business credit, that credit can be used to secure the credit cards, so no personal guarantee is needed. It's important to keep in mind that the entity you choose can also make you liable. For example, a sole proprietorship or partnership means you, as the owner, are liable for your business debts, no matter if you do or don't put your Social Security number on the funding application. Corporations and an LLC doesn't require you be personally liable for your business debts. Let's look at how the biggest private companies handle personal guarantees. Some of the largest private companies in the United States include Dell. Michael Dell is the CEO. Mars. Paul Michaels is the CEO. PricewaterhouseCoopers. Greg Brenneman is the CEO. Publix. William Crenshaw is the CEO. Pilot Flying J. John Compton is the CEO. Does it make sense that these CEOs personally guarantee their business debts? Dell does about $57 billion in business annually and has over 83 reported accounts on their business reports with Experian. With $57 billion in revenue, Dell has an appetite for very high credit limits, even exceeding $100 million. So do you think when Dell needs this type of money and goes to get credit, that Michael Dell personally guarantees the financing and credit that Dell obtains? The highest amount he's probably personally financed is his home, worth $73.3 million. So his credit isn't even strong enough to secure the type of capital the business needs to operate and grow, as they often need and use $100+ million. This is actually typical of all large businesses and many small businesses. The company quickly outgrows the credit of the individual owner, and at some point, the business itself has to stand on its own. This is why they build business credit. Per SBA, credit limits on business accounts are 10 to 100 times that of consumer credit. This is because a business has a much bigger need for credit than an individual does. Loan amounts and credit limits are always higher on business accounts than with consumer accounts because businesses make and spend a lot more money than a consumer will. With business credit, the business itself establishes its own credit profile and score. This profile and score is for the business, which is identified by its EIN number, not the Social Security number of the owner or CEO. And once this profile and score are established, then the business can get credit in its name, with no need for a personal guarantee from the owner. Remember what Wikipedia stated. A personal guarantee is needed only when they, the business, lacks a credit history or lacks a credit rating. But once the business has its own credit, it can then get money using that credit, just as every big private or public company does. Getting business credit without a personal guarantee is not only possible, but it's necessary for a business to grow. This is because businesses way outgrow the credit of their owners, and this often happens very quickly. So even if you do personally guarantee your business debts now, that's unsustainable long term. But here's a secret. Business credit isn't only for the big boys. Any business can get business credit without a personal guarantee. The key is that this is only possible if the business has an established credit profile and score. When companies are approved for business credit, it's typically not due to their size. Instead, credit issuers and lenders have a set of criteria that must be met for approval. The approval isn't based on company size, but instead it's based on the company being established. To determine whether any business is established, lenders and credit issuers have a credibility test they run on every application for credit. There are many items credit issuers look at to issue no personal guarantee credit. You must have a physical business address or use a virtual address. You'll need to have a business phone number, preferably a toll-free number, and it'll need to be listed in 411. You'll need a business fax number. You should have a professional email address and website. You must have the proper licenses for your business, industry, city, county, and state. You need an EIN, entity setup, and bank account. There are actually 20 items on this test that will be reviewed. If you meet this criteria, you can then start to get approved for starter vendor accounts. These are accounts that you can get approved for even with no established credit. And these accounts report to the business bureaus Dun & Bradstreet, Equifax, and Experian. So by getting approved for this credit and paying your bill on time, you can then establish your business credit profile and score. Many people think that nobody can get credit without a personal guarantee. You now know that's just not feasible or logical. Companies have to get business credit to obtain the capital they need for growth. But the reason this belief or myth exists is because of a few common mistakes that business owners often make that end up with them getting declined when they apply. The most common mistake that's made when applying for business credit is applying for credit in the wrong order. Stores and lenders will not approve you for no personal guarantee credit until your business credit is established. So you can't start getting credit there, or you'll get denied. You also can't put your Social Security number on the application. If you do this, they will pull your personal credit, and you'll be guaranteeing the debt. Many people think they have business credit because they have a credit card with their business name. But if a Social Security number was supplied to get that card, that's not usually real business credit as personal liability is involved, and the account might very well report to the personal bureaus, not the business bureaus. So leave your Social Security number off of the application when applying. Also keep in mind, many frontline people you speak with who work for credit issuers don't know about business credit. Even business bankers aren't trained on business credit. So they'll often tell you that an SSN must be supplied because they don't know any better. Also remember, you must ensure your credibility is in check to get approved. If it's not, you'll be seen as unestablished and will get denied. Once you know your business is set up credibly, it's time to apply for new business credit. When establishing business credit, there's actually 3 types of credit you can get. Vendor credit, starter accounts that offer net 30 terms. Store credit, revolving credit cards available in retail stores. Cash credit, revolving credit cards such as Visa and MasterCard that card issuers or banks approve you for. You must get approved with vendors first who offer net 30 terms. Then after you use those accounts and pay your bills, the accounts will get reported to the business credit reporting agencies. Then, and only then, will you have an established business credit profile and score. Once your business credit's established, you can start to get approved for store revolving credit next. You should seek out vendors who will approve a business for credit even if none is established yet. There are actually many vendor sources who are well known for this. Uline, Quill, Reliable, Laughlin and Associates, just to name a few. To start business credit, you first should get approved for accounts with these vendors. Some will require you purchase their products first. Some will have you make 3 orders and pay before they'll issue you a line of credit. But all of the sources I listed will approve a brand new business, even if you have no credit now. You'll want to ensure you have a total of 5 payment experiences reported before you even think of applying for store credit. A payment experience is the reporting of an account to a business reporting agency. So Quill, for example, reports to both D&B and Experian. That means that one account will count as 2 payment experiences. Laughlin only reports to Experian, counting as 1 payment experience. All vendors don't just give out no personal guarantee credit. Many have requirements that must be met first. But there are a lot of sources who don't have these requirements. Laughlin and Associates only requires a purchase and that you have a 411 number and business bank account. Quill won't approve you right away unless your D&B profile is established, but they will approve you if you first place a few orders with them. Reliable office supplies usually requires you place 2 orders first before approving you for a net 30 account, unless your D&B profile is established. Uline will approve you for an initial vendor account if you have 2 good trade references and at least 1 good bank reference. You'll need to know how many payment experiences you have established before trying to apply for store credit. So get and review your business credit reports as you go to watch your credit being built in real time. Once you have 5 payment experiences reporting, next you can start to secure revolving store credit cards for your employment identification number. Keep in mind, all applications will ask for your Social Security number, but you do not need to provide your SSN on the application. If you do supply your SSN, they will pull your personal credit, and if it's bad, you'll get denied. When you leave the SSN field blank, they'll pull your business credit. And once they see that you have business credit and at least 5 payment experiences, you'll start to get approved for established reporting, then store credit. Most major retailers do offer business credit as well as consumer credit. Staples, Office Depot, Home Depot, Lowe's, Target, Walmart, Costco, Sam's Club, Radio Shack, Best Buy, BP, Chevron, Amazon, Shell, and most other stores offer business credit. Some sources, like Home Depot, might have more stringent approval requirements and want to see big revenue and 3 years in business for approval of no personal guarantee credit. Costco requires 2 years in business for approval of no personal guarantee accounts. Lowe's requires you be in business 3 years for no personal guarantee approval, unless you have good established credit. Best Buy requires you have established credit to get approved with no personal guarantee. Amazon will also require a personal guarantee if your credit is unestablished. Most stores will give you no personal guarantee credit if you have your business credit established. The key is to have a credit profile and score established, or you won't get approved for no personal guarantee credit at stores or with banks. Remember, a personal guarantee is needed when credit isn't established. But once it is, you can get approved with most sources regardless of your size or time in business, except for a few exceptions. Once you have a total of 10 payment experiences reported to the business bureaus, then you can start to get cash credit cards. Cash cards are those issued by Visa, MasterCard, even American Express, and are cards you can use anywhere, not just cards you can only use in one store. It's recommended that at least one of your 10 payment experiences has a high limit of $10,000 or more before applying for cash credit. Dell is a revolving store source who regularly approves business owners with established business credit for an account with a limit of $10,000 or more. KeyBank and Home Depot are two sources that offer revolving cash credit cards you can use most anywhere. Many banks offer these also. Just keep in mind before applying, you must have at least 10 payment experiences, and one account should have a limit of $10,000 or higher. When you follow these steps, your business can have an established business credit profile and score. This profile and score can then be used to get your credit in your business name, regardless of your personal credit and without a personal guarantee. Then you'll want to continue building business credit, applying and getting more credit, using that credit, and getting approved for higher and higher credit limits.